Good morning, traders. Today we want to discuss Fibonacci trader reveals secrets of bullish Fibonacci bat pattern. All right, are you the Batman? All right. So what we are discussing here is nothing to do with the Batman or the bat itself. It is about a Fibonacci pattern that we call the bat pattern. All right. So if you are day trading, swing trading, and position trading, you can learn about the bat pattern, which is what they call, some traders call harmonic bat pattern. I call them Fibonacci patterns. We have the Gartley pattern, it's a Fibonacci pattern. We have the bat pattern, it's a Fibonacci pattern. We have the butterfly pattern, it's a Fibonacci pattern. We have the crab pattern, it is also a Fibonacci pattern. And today I want to reveal to you the secrets of bullish Fibonacci bat pattern. All right. So the first condition to identify the bat pattern is to know where the pattern is formed. Like any other bullish pattern, the bullish bat pattern is formed at the end of a downtrend. So we have a downtrend. Price must be going down first. If you remember that, you will start filtering out false bat pattern. You want to see first a downtrend. If you do not see a downtrend, there is no bullish bat pattern. The next thing that you want to see is a double bottom chart pattern with a higher low. All right. So a double bottom chart pattern, normally trader will think of equal low, all right, but we want a double bottom chart pattern with a higher low. All right, so there is another pattern that we call the Gartley pattern, a bullish Gartley pattern. It's a little bit, there's a big difference, but a little bit, okay, similar to the bullish bat pattern. And I want to show you how we can quickly recognize whether you can think, okay, repeat, if you can think of, all right, the bullish Gartley pattern, or whether you should think of the bullish bat pattern. The bullish Gartley pattern is also a double bottom chart pattern with a higher low, but with a steeper, okay, you can see here, the higher low is quite high for the Gartley pattern. But for the bat pattern, the bullish bat pattern, the difference between this low and this one is not big. All right, that's all I want you to remember. Whenever you see a double bottom with a higher low, but the higher low is quite high, the second low is quite high in comparison to the first one, the first thing that you should think of is the bullish Gartley pattern. It doesn't mean this is a bullish Gartley pattern until we ascertain that it's a bullish Gartley pattern. But the first thing that should come into your mind if you are thinking of Fibonacci pattern is the Gartley pattern, because the second low is quite far away from the first low. Okay, but for the bat pattern, all right, the second low is not far away from, okay, the first low. So here on my chart, you can see that I put orange line here, the orange spot on my chart, can you see it? And this red spot. You see this low and this one? The orange low is a little bit higher than the red spot. See here? So the red spot here. So we have a low and another higher low. And the difference between the first low and the second low is not big. So the first thing that is coming to my mind is that maybe we have a bat pattern. You understand? But if the second low is far away from the first one, the first thing that I'm going to think of is what? The bullish Gartley pattern. But this video is not about the Gartley pattern. It's about, okay, a Fibonacci trader reveals secret of bullish bat pattern. And a bullish bat pattern is a special double bottom chart pattern when the difference between the second low is not significant in comparison to the first low. But there are other verifications that we need to do to ascertain that we truly have a valid bullish bat pattern, because the bullish bat pattern is a Fibonacci pattern and the structure of the bat pattern is respecting specific Fibonacci ratio. All right? But the first thing that you want to understand is that you want to know where does the bullish bat pattern form. Like every other bullish pattern, the bullish bat pattern is formed at the end of a downtrend. So we want to see first a downtrend. Okay? When we see a downtrend, we want the price to come out of the downtrend. That move from here, where I put the red spot to the pink spot, that's what we call XA. So from this point here, where the price starts coming out of the declining channel, that's what we call X, letter X for X-ray. And when the move has ended, that's what we call A for alpha. So price was going down first, and now the price is out of the declining channel with the price action from X to A. That's the first condition for a bullish bat pattern. The next verification is that the retracement from A to B, where is B? Let me show you on my chart. This is B here, the point, the green spot here, that's what I call B. Should be between 38.2% and a 50% Fibonacci retracement level of SA. So this is point B here, so this is point A, price going down. That retracement from A to B should be a shallow retracement. So if you don't want to remember that the A to B retracement should be between 38.2% and 50% Fibonacci retracement of SA, just remember that the retracement A to B should be a shallow retracement. If you have already watched the video that I call Clear Explanation of the Bearish Fibonacci Butterfly Pattern, you will understand that the retracement A to B is quite distinctive when we are talking about butterfly pattern, because it's a deeper retracement. So whenever we see A to B, it's a deeper retracement to the SA. The first Fibonacci pattern that is coming to our mind is the butterfly pattern. But if the retracement of the price action from A to B is a shallow, which means between 38.2% and 50% Fibonacci retracement level of the SA, the first Fibonacci pattern that is coming to our mind is which one? The bat pattern. So now I'm telling you how you can quickly think of. So you want to think of it first before you verify that it's truly a bad pattern. So the quickest way to quickly think of a bad pattern, you want to see a double bottom where the difference between the second low and the first low is not significant. So here I see it now, as I'm showing you here. There was this turn around here, which is not far away from the first one. So what is coming to my mind? Maybe we have a bullish bat pattern. Now I want to check. We want to see a bearish trend. So there was a bearish trend first. Now this price action came out of the channel. So I know straight away that I should label this one XA. So downtrend, XA is coming out of the channel. Now I have a double bottom here that is not far. The second bottom is not far from the. Now I need to verify whether the AB, you can see here how the price came down. Came down 1, 2, 3. You see here? Boom. If we use the Fibonacci, by the way, this pattern here is a bad pattern, okay, because I've done it before. If you use a Fibonacci retracement for the price action from X to A, you will see that the price did stop right here. Can you see? I have too many lines on my chart. I need those lines, that's why I don't want to remove it. So you see all this orange line or horizontal line, I don't want to remove them because I need them later on. All right, so apology to traders. So you can see that the point B is at 50%. Can you see 50% where I'm moving my cursor? 50% Fibonacci retracement level of SA. So should be between 38.2% and 50%. All right, here it is. The point B is at a 50% Fibonacci retracement level. So now, remember that the pattern is not completed until it's fully completed. But the pattern is completed here. But then the A to B should be between 38.2% and 50% Fibonacci retracement level of SA. All right? And we want the B, this is the point B, to point C. Let's call out the point C in turquoise. The point, this is the point C here. One second, please, traders. Try to write a C. Oops. All right, so this is point C here. So the B to C should be between 38.2% and 88.6% Fibonacci retracement level of AB. So the point A is the pink spot here, the point B, and we want the B to C to be between 38.2% and 88.6% Fibonacci retracement level of AB. All I want you to remember is that the B to C should not be 100% Fibonacci retracement level of AB. That's all you need to remember. The B to C for all Fibonacci pattern should not be 100% Fibonacci retracement. We don't want the C to be exactly equal to C. We don't want it to be too close to a point A. We want it to be between 38.2% and 88.6% Fibonacci retracement level of AB. This is about the anatomy or the structure of a valid bat pattern. The last part of this pattern is C to D. So the pattern is completed at point D. A D for delta. Okay, so this is the orange spot on my chart is point D. And according to the theory, the C to D should go down to the 88.6% Fibonacci retracement level of SA. This is also very important when we are certifying the bat pattern. The first verification is that the A to B should be between 38.2% and 50% Fibonacci retracement level of SA. In another word, the A to B should be a shallow retracement of SA. All right? The second critical verification is that the C to D should end in the zone of 88.6% Fibonacci retracement level of XA. So when we apply one more time the Fibonacci retracement from X to A, I already have it on my chart, the point D should stop at 88.6% Fibonacci retracement. Can you see 88.6%? You see, I do not use 88.6%. I use exactly 88% level. I recommend to trader to use exactly 88%. So if you see here, the price stopped exactly. You see the dotted line, the red. Hold on, please. Am I talking to myself? Can you see the red dotted line? Okay, that's where you see it's 88% Fibonacci retracement level of SA. That's where the price did stop. That's where we have the orange line. So our bat pattern is completed at 88% Fibonacci retracement level of SA. And we have a double bottom pattern where the second low is not far away from the first low, because from the 88% down to the 100%, which at this point is not big difference. So we have a double bottom chart pattern where the second low is just a little bit higher than the first low, which means the C to D has ended exactly at 88% Fibonacci retracement level of SA. But you want to understand that for the bat pattern, we want to see first a downtrend and a price action SA coming out of the downtrend, the down channel, followed by the AB retracement, which should be a shallow retracement. If it's a deeper retracement, we will think of a butterfly pattern. If it is a shallow retracement between 38.2% and 50%, all right, shouldn't go below 50%, should remain in the bullish zone above the 50% level, critical, the AB retracement. And then we don't want the B to C retracement to be 100% retracement. We want it to be between 38.2% and 88.6% level. And we want a retracement, the price action C to D, to stop at 88.6% Fibonacci retracement level of SA. On this 4-hour time frame, a bullish bat pattern is completed for the dollar-yen. And at that point in time, we have a bullish trading setup. How to trade it? Now that we have this bullish trading setup, which is a bullish bat pattern, we must use a multiple time frame trading method to trade it. So as I see this on the 4-hour time frame, I will be a little bit curious. I will draw my warning line at 10074, and I will say priority to bullish signal above 10074 on this 4-hour time frame of the dollar-yen. And then I will also go to the daily chart or weekly chart to validate this trading setup. Is it making sense? Are we at the support level? What is the market pattern on the higher time frame? What is the bigger picture? Does this bullish bat pattern on the 4-hour time frame makes also sense on a higher time frame? This is about the validation of the bat pattern. Once we finish to validate our bat pattern, we will now use multiple time frame trading method or a top-down trading method to trade it. Because we are on the 4-hour time frame, the 4-hour time frame is our trading setup. We will go to the 15-minute time frame for the signal at that point in time, right here. 15-minute time frame for the signal, and we will use, okay, if I put a vertical line there, pay attention to the red vertical line. We will go to the 15-minute time frame, wait for the signal, and then we will enter the trade either on the 3-minute or 15-minute time frame. Okay, there's a bearish trend line here. See, as traders bought it here after the bat pattern is completed, they are buying, price going up, price stop at the edge, on the edge of this bearish trend line. These are smart traders. So they bought it here, the pattern is completed at point D. The pattern is only completed at point D. It's not yet completed at point B or point C or point A. It's only completed at point D for delta. With this exact structure, we want the A to be a shallow retracement, and we want the point D to be in a zone of 88% Fibonacci retracement level of SA. We want a downtrend first and a price to come out of the downtrend. With those information, you will be able to improve your bullish bat pattern trading and trade it like a pro using a top-down trading method. Please do not buy straight away when the pattern is completed. Use a top-down trading method to trade it. The beauty of the bat pattern, the bullish bat pattern, is that if one is buying here, it's better to place stop loss below this low here, because the difference between this low and this one is not significant in comparison to the Gartley bullish pattern. Alright? But remember, when the pattern is completed, doesn't mean buy straight away. It means now implement a multiple time frame trading method to control the risk. If the signal fail, come out. If you buy, pay attention to the resistance level. See here, those bought it here. I found a resistance here, pull back. Now we got is forming a double bottom. So in fact, though the pattern is completed here, people bought it, went up here, it will become truly bullish if it breaks above this bearish trend line and display a higher low or find a support at the level of 10143, or break above this resistance here at 10275. Okay, so alright, should break above the bearish trend line here. But the point I want you to understand, in order to quickly pinpoint the bullish bat pattern, you are looking for a double bottom where the second low is not far away from the first low. You want the second part of the double bottom chart pattern to be subdivided into three more. 1, 2, 3. Where is it? So a double bottom, first low, not far, second low, not far away from the first one. So you will spot it quickly on your chart. You say, well, here looks like a bad pattern. Not here, bad pattern. And you want the second part of the double bottom pattern to be subdivided into three more. 1, 2, 3. Where is it? 1, 2, 3. Down in three more. Here it is. All we want, down to the 50% level, not below. Shouldn't go below 50% level. Rally up and then down again. Here. 1, 2, 3. We have the point A, B, C, D. The pattern is completed at point D for delta. So it's a double bottom chart pattern when the second low is not far away from the first. And also is a part of that, the bat pattern is formed of A, B, C, D, price going down, 1, 2, 3, forming the A, B, C, D pattern. In order to verify or to ascertain that this is a bad pattern, the retracement A to B should be a shallow retracement in comparison to SA, between 38.2% and 50% level. Just remember that the retracement A to B should not go beyond the 50% level. That's it. Alright? And we want the B to C shouldn't be 100% retracement level, should be between 38.2% and 88.6% Fibonacci retracement level. This is the general rule relating to BC for all Fibonacci pattern. Now, the next verification is that the C to D should stop at 88.6% Fibonacci retracement level of SA. There are similarities between the bat pattern and the Gartley pattern, but you have to understand that the A to B, that's where the A to B and the C to D allow us to differentiate the Gartley pattern from the bat pattern. For the Gartley pattern, the B the A to B should go down below the 50%, but will stop at 61.8% level. And the retracement C to D should stop at 78.6% level. So therefore, the Gartley pattern is a special double bottom with a sharper, higher low, where the difference between the second low is significant in relation to the first. But for the Bat pattern, the difference between the second low and the first is not significant because the second low has stopped at 88.6% Fibonacci retracement level of SA. If this is too much for you to understand or to take in, just remember that you are looking for a double bottom where the second low is not far away from the first. And also the second part of the double bottom pattern is subdivided, is very important, into three moves. 1, 2, 3. So you want to see something like this. Price was going down first, and then there is a SA coming out and price coming down. 1, 2, 3, forming a shallow double bottom chart pattern like this. Very, very important. You want A to B to be above the 50% Fibonacci retracement level of this session. All right. And if the pattern is completed at point D, doesn't mean buy, it means validate the trading setup, draw your warning line, and implement a top-down trading method to trade it. If the signal fails, come out. Always pay attention to the market environment and economy news. Remember that it's quite challenging today or swing trade from the 1st to the 8th of the month because of the high impact economy news, and also between the 15th to the 20th of the month. So if the market environment is not suitable, do not go around placing trade anyhow. You want to check the market environment. The market environment is good, is bullish. Use your bullish watch list. If the market environment is bearish, use your bearish watch list. If the market environment is quite challenging, usually between the 1st and the 8th or the 15th to the 20th, you may decide to keep your money in your bank and come back and trade another day instead of trying to be a hero in the financial market. This is about a Fibonacci trader. Reveal the secrets of bullish Fibonacci Bat pattern. The most important verification is that the AB retracement in relation to SA should be a shallow retracement and should be above the 50% Fibonacci retracement level of SA. The second critical verification is that the C to D should stop at 88.6% Fibonacci retracement level of SA. We want to see first a downtrend, and we want the price to escape out of the downtrend, a price coming down, A, B, C, D. The first thing that will come into our mind, we see a double bottom when the difference between the second low and the first is not significant. And we want to see these three move down, and then we check whether all the ratios are clearly in place, and then we use a top-down trading method to trade it. If this is the first time that you are learning about the Bat pattern, it's very important to use a demo account to test and retest, practice until you have some experience, and then you overcome some challenges when you are day trading and swing trading, and you may gain more skills practicing, trying every day to improve, your ability to trade, the Bat pattern. This is the end of this tutorial. If you have any question or suggestion, put in a comment section, and in due course, I will record another video to answer your specific question. We can use this bullish bat pattern for day trading, for scalping, for swing trading, for position trading. You will see on a yearly chart, weekly chart, monthly chart, hourly chart, 2-hour time frame, GSCW24 trader. Whenever you see the pattern, go to the first best time frame and day trade. GSCWSY008 trader, you see a Fibonacci pattern, you identify it, you are certain that it's the pattern, use your TSWSY008 trading system. As always, pay attention to the market pattern. I cannot stop talking about this. Market environment, all right? Avoid the challenging period and focus on the best period day, and combine your technical analysis with the fundamentals. We are the GSTW24 traders talking about Fibonacci trader reveals secrets of bullish Fibonacci bat pattern. Happy trading to you all, and speak to you soon.